Welcome back. And in our top business story, the International Monetary Fund IMF has raised its 2014 economic growth forecast for the United Arab Emirates to 4.5%. On Thursday, the IMF stated that the UAE's real gross domestic product growth will remain firm and at the same level as now estimated for 2013, driven by ongoing momentum in non-oil activity, adding that oil fuel growth could be limited due to an ample global supply. According to Harold Finger, the IMF's mission chief, the real estate sector in particular has seen a steep recovery, with prices in the Dubai residential real estate market having increased rapidly in selected areas. In October, the Washington-based lender forecast that the world's number 3 oil exporter would see inflation-adjusted GDP expand 3.9% in 2014 and 4.0% in 2013. According to the IMF, growth should be aided by a number of mega projects and Dubai's hosting of the Expo 2020 exhibition. House prices in Dubai have climbed more than 20% over the past year, higher than any major global market, as billions of dollars of government real estate projects triggered a buying spree and stock market bull run. The IMF welcomed last year's doubling in Dubai's real estate fees to 4%, designed to stem the speculation, and also added that the central bank's newly implemented regulations on loan concentration and real estate exposure for banks will help protect the soundness of the banking system. Hotels in Dubai reported the highest profit levels in the region in 2013 for the fourth consecutive year, according to the latest Hotstats survey by TRI Hospitality Consulting Middle East. During December, Dubai continued to record strong performance levels, reflecting the growth experienced throughout the year. Although the market witnessed a 4.5% decline in occupancy to 79.5%, average room rates rose 9.1% to $368.22, driving revenue per available room RevPAR growth for 3.2% to $292.70. Average rates and RevPAR for the month exceeded levels witnessed throughout the year and helped push year-to-date figures up 6.5% and 7.6% respectively, according to figures published in the survey. Bottom-line performance levels in December were also boosted by a 2.8% rise in total revenue per available room or TRevPAR, which was driven by increased MICE revenues and coupled with lower operating costs. Peter Goddard, the managing director of TRI Hospitality Consulting, was quoted as saying that occupancy levels in December 2013 were marginally lower than December 2012, which is attributed to an increase in supply compared to the same period last year. Elsewhere, the survey showed Jeddah witnessed growth in all key performance indicators for December as corporate demand surged in the city. The Dubai Financial Market (DFM) has issued rules allowing the lending and borrowing of securities, part of efforts to make the market more flexible ahead of an influx of foreign funds. According to a statement from the DFM on Friday, lending and borrowing of securities is expected to begin in the first quarter of this year if investors are ready. Mariam Fikri, an executive vice president of DFM, was quoted in local reports as saying that securities lending and borrowing will help the development of other products on the DFM, such as exchange-traded funds. The United Arab Emirates market regulator, the Securities and Commodities Authority (SCA), approved regulations for securities lending and borrowing in October 2012, but exchanges have taken time to introduce the practice due to concerns about causing instability. In the initial phase, securities lending and borrowing will only be for market making and setting securities deliveries that have failed. Dubai was one of the best performing stock markets in the world last year, with its main index rocketing more than 100% and is expected to attract hundreds of millions of dollars of fresh foreign money after May, when index compiler MSCI is due to upgrade it to emerging market status. Industry experts have projected the GCC healthcare market to grow at an annual rate of 11% to 161 billion dirhams by 2015. And they identified Saudi and the UAE as the fastest growing markets in the region. Experts say governments across the region have made significant investments in developing health and medical infrastructures, as well as increased accessibility. However, the challenge of connectivity remains. BrainLab, a German provider of software-driven medical technology, says they aim to address this with their latest cloud-based innovation called Quentry. Supporting targeted, less invasive treatment, BrainLab is looking at expanding connectivity in the region and benefiting hospitals, clinics, imaging centers, and physicians by promoting image sharing and collaboration in the region. According to company officials, the product, which is already available in Saudi Arabia, will give the health sector freedom to access, control, and share diagnostic imaging from anywhere within a highly secured clinical network that will ultimately benefit patients.
I think that is especially suitable to some of the hospitals, or even to all hospitals here in the UAE. I just grab one example. There's the Cleveland Clinic that is helping to set up a facility in Abu Dhabi. For those that work internationally and connect with others, this is the ideal product. Quentry, a cloud-based version, helps connecting the people and solving this problem. Cloud-based means data is not stored at a server in a single hospital, but even this version can be made available if needed. And so not only individuals like physicians can sign up, but complete hospitals in order to set up their referring physicians network, whether these are digital radiology centers, whether these are connected hospitals, affiliated hospitals. So also complete hospitals can be set up.